So maybe to conclude, if you were to make any predictions on what timeline do we see a lot of these things happening at scale, how far out is that from your perspective?
So this year we're already on production with things like BlackRock and Fidelity's on production using us, and Templeton's on production. So you already see a lot of this really key part of the capital markets on production. I think all of their goals, in line with all those digital asset employees I just told you about, is to scale that. I know they're trying to scale that. I know they're looking for more sources of, DeFi money, crypto bro money, all this money, crypto VC money, whatever. And I think they'll be moderately successful at that. So you'll see a moderate amount of scaling of those kind of asset management folks that came in early during next year. And I know that a number of institutional users are starting to go to production next year that we're working with, and that we're in the process of helping get ready for that. So I think you'll see early production of the institutional side next year. And then once they go to production, the question will naturally be, okay, we're live with this thing. We have this institutional grade, tokenized fund with like a minimum of 20 million from another institutional buyer on some L2 we made or whatever. How do we scale that? How do we like we did it, we launched it, guys. Your ass is now on the line to make it a success. Hope you can do that, or else you'll probably get fired. Welcome to banking. So then the next year, they're going to have metrics of like, okay, we launched the thing you wanted to launch last year. Like, what happened? So 2025, they launched institutional stuff. 2026, they look at like the numbers on that growth. If that growth is solid, the party's really on. And then 2027, they probably have invested in the growth of that. And so the growth really gets going.
Alrighty, what is going on, everybody? Welcome back to another quick CYPRX video breakdown. Sorry that we got interrupted with a little quick commercial there on YouTube, but yeah, I really liked kicking this video breakdown off with you guys today with Sergey from Chainlink, discussing and talking about the future projection of this digital asset space. I really like his perspective. He talks about institutional grade production in 2025, then in 2026, them taking a step back and looking at the landscape and seeing if it was profitable, and then 2027 flipping on that switch and going full scale, as you all heard. So I really like that long-term vision there, which is going to lead us into today's video breakdown. We're going to get into the fundamental landscape as we make our way towards the end of 2024. There are still some headwinds that we need to get through, in my personal opinion, that could still weigh on risk sentiment in the short term. You guys know long term, I'm extremely bullish on this space. Just like you all, I would like to see some, or at least the real researchers and the real dollar cost averagers and the individuals that are really trying to build good portfolios out there, I would still like to see some more discounts so I can unload some capital into discounted prices before we see massive amounts of money flood into this space. If we get that opportunity, obviously, of course, it's not guaranteed, but I'm going to give you guys into some insights into a perspective today via some fundamentals as we head into 2025 to be paying attention to. We're also going to quickly cover some XRP technical analysis and the total cryptocurrency market cap technical analysis. I'm going to try to keep this video short. We're already four minutes in. I'm going to try to keep this below 20 minutes. So just a real quick call. Happy holidays to everybody if you guys celebrate those things. Safe travels to anybody that's out there traveling to and from destinations to see family members and whatnot. With that being said, let's jump in. So first, I'm going to share my screen with you guys, and we're going to go over this fundamental piece that I just recently typed out for the private CYPRX community. And we're just going to pick it apart, and I'm going to read through it. And this is, again, my perspective on the total cryptocurrency market cap and what I'm paying attention to moving forward as we head into 2025 via some of the risks that could still unfold in the current market landscape. Now, if we can start to put these risks completely behind us, obviously, of course, we'll adjust to that sentiment as it unfolds. But these are some things that I firmly believe that if they unfold at a rapid pace, or much more than people are expecting now, given the current market sentiment, which is optimistic, it's risk on. November, we saw the biggest monthly candlestick in crypto's history, and that only has 2 days left before it closes and sets that or solidifies that in place as a moment in history where we saw over $1.2 trillion come into this market in just 1 month, which is phenomenal to see. some things that could possibly weigh on the current optimism in the market as we head into 2025 that I feel like not a lot of people are paying attention to. Markets tend to lean greedier towards the holiday season, especially when things are pumping. People get a little bit blindsided and they don't see risks that still remain in the market. So my job here is to show you guys some of those risks. If they unfold, you will know what those risks are and how to be mindful of them moving forward. And then we'll get into some XRP, like I said, analysis and some total cryptocurrency market cap analysis here in just 1 second. So November 28th, 2024, our private CYPRX report reads, by the way, if you guys want access to these reports, I hand type them out for the private community members in our Discord every single day of the week. And you guys can head over to CYPRXtrading.com if you want to tap into this. Crypto market overview. As of today, the total cryptocurrency market remains relatively quiet, experiencing a slight dip as of time of writing this article, was approximately about $6 billion down on the day. The market has held comfortably above the $3 trillion mark for over 10 days. Pay attention because that $3 trillion mark is going to come back into fruition when we do our analysis. While this stability is encouraging, I would start to consider taking profits if we see a fundamental shift in market sentiment or a risk-off behavior prevails, leading to a decisive break below the $3 trillion mark with a daily candle close. For now, the focus remains on key events and macroeconomic data. So we'll get to that piece of the technical analysis here in just 1 second. Well, I'll give you guys that outlook and what I would be optimistic on in the total cryptocurrency market cap and where I would start to possibly consider taking some profits via some positions that we were getting into back in August and September when the market was at $1.7 trillion. Okay. So post FOMC meeting in minutes outlook, right? Obviously, of course, we had the FOMC meeting in minutes this past week. We had the core PCE come out, which is the primary gauge of inflation for the Federal Reserve and their monetary policy decisions. Following this week's FOMC meeting in minutes in the U.S. core PCE report, the market continues to price in a high probability of a 25 basis point Fed cut in December. Now, we know, obviously, of course, that keeps risk assets more hopeful and forward-looking and bullish. According to the CME Fed Watch tool, the odds have risen to a 70% chance, up from a range of 55 to 66% earlier in the week. This leaves a 30% chance that the Fed will leave rates unchanged or possibly even consider holding them. So only a 30% chance that the Fed will leave rates unchanged, right? However, based on current fundamentals, this is something I want you guys to pay attention to. I believe that the market might be getting ahead of itself, which it tends to do. The current optimistic sentiment risks overlooking potential challenges in 2025. As discussed in previous, market updates that I've given you guys, markets often price in narratives very aggressively. So that's exactly what I was talking about. The markets are heavily fixated right now on the idea that the Fed's going to continue to cut rates along with other major central banks, and that's the Bank of Japan on the opposite side of the spectrum is not going to hike rates. So I said, and the prevailing view assumes sustained rate cuts by the Fed and no immediate action from the Bank of Japan. Any disruption, however, to this sentiment currently, to these assumptions could dampen sentiment significantly. All right. So as we head into 2025, if we see possible inflation increase significantly in the US, this could bring back rate hikes or a pause in rate cuts to the table via the Federal Reserve, which would most likely dampen market sentiment, considering that markets are continuing to aggressively price in rate cuts from the Federal Reserve. On the opposite side of the spectrum, we're also going to talk about the Bank of Japan monetary policy positioning, right? Where if the Bank of Japan did decide to hike rates, that could also create fear, uncertainty, and doubt in the market, because we know, again, most likely scenario is that if the Bank of Japan hikes rates, it's going to make the yen more attractive and lead to some unwinding of the yen carry trade. So moving on, I have some, obviously, of course, screenshots from fundamental pieces that I gathered this information from. You can see that this is an FX Street article where it talks about that 70% chance of a Fed rate cut in December, which is keeping markets optimistic right now. So I said here in the report, key risk factors to monitor looking ahead to the remainder of 2024 and into 2025 that I am closely watching. U.S. inflation and labor market data, and the Fed's trajectory for rate cuts that could stall or reverse if inflation unexpectedly rises or labor market resilience persists. Bank of Japan policy decisions. Any economic data from Japan prompting fears of a Bank of Japan rate hike that could destabilize global markets, especially risk assets, like we saw back on July 31st when the Bank of Japan hiked rates, where from July 31st into the first week of August, we saw the cryptocurrency market cap go from $2.4 trillion all the way down to $1.7 trillion. And one of those primary factors weighing on risk sentiment at the time was the rapid unwinding of the yen carry trade. Geopolitical tensions, ongoing developments in the Middle East and other regions that could shift risk sentiment from current sentiment, risk on, to a risk off environment. All right. So I break these three pieces down in this report for the private community. First, we're going to cover US inflation risks. Recent data indicates a slight uptick in inflation if you guys have been paying attention, as the Fed's preferred gauge, the Personal Consumption Expenditures, or PCE index, rose to 2.3% year over year in October, up from 2.1% in September. Core PCE climbed to 2.8%, highlighting persistent underlying inflationary pressures. Economists expect disinflationary trends observed earlier this year to slow, creating a bumpy landing scenario for inflation in 2025. Keep in mind that one of the reasons why risk assets, primarily crypto, have been so extremely bullish, again, one of the many factors, has been because this idea of the soft landing narrative is going to be achieved by the Federal Reserve. So obviously, of course, an increase in inflation could weigh on that sentiment as we head into 2025. Additionally, proposed tariffs by President-elect Trump, including a 25% tariff on products from Mexico and Canada and a 10% hike on Chinese imports, present upside risks to inflation. Keep in mind, again, like I mentioned at the beginning of this piece, markets tend to get ahead of themselves pricing information in. Everybody's extremely optimistic and bullish because of President Trump's stance on crypto, but they're not understanding that his policies could lead to an increase in inflation, and an increase in inflation would lead to the Federal Reserve inevitably either pausing or hiking possibly rates, okay, which obviously, of course, would be one of those factors dampening market sentiment. So this is another thing, another factor that because optimism in the market is so prevailing right now, investors are not paying attention to this stuff. So economists estimate these tariffs could push the PCE index higher by 0.5% to 1.1%, with potential ripple effects on consumer prices and economic stability. Retaliatory tariffs from Mexico and Canada could also further exacerbate these issues, disrupting supply chains and driving up costs for U.S. consumers, particularly in the sector like automotive and agriculture. Here is a fundamental piece that the students, the private members, can thoroughly read through to elaborate on what it is that I was talking about in this digest. Such policies could force the Fed to reassess its easing path, potentially pausing rate cuts or even hiking rates again, which could weigh on risk sentiment. Now, again, obviously, of course, these will be short-term factors that I'm attempting to get you guys to fixate your attention on that could unfold as we head into 2025. I'm not bearish on crypto. I want you guys to understand that as we prevail through the remainder of this fundamental piece. Long-term, I am bullish, but because I'm a day trader, because I'm an intermediate trader, where I pay attention to day-to-day price action, I pay attention to these short price fluctuations and what could cause them in the markets. Another thing that I'm paying attention to as we head into 2025, outside of possible inflationary pressures on the US front, is the Bank of Japan rate hike concerns. In Japan, the Bank of Japan gradual retreat from ultra-loose monetary policy raises concerns about the unwinding of the yen carry trade. Obviously, of course, we know the Bank of Japan hiked rates most recently, and that created a spiral effect, unwinding the yen carry trade on July 31st, all the way into the first week of August, which liquidated, risk asset positions across all stock markets and across the cryptocurrency markets as a whole. So this trade has been a significant driver of global liquidity for risk assets. If the Bank of Japan does decide to raise interest rates further or signals an end to its accommodative stance, it could lead to a sharp repricing across global markets. So here, if you guys are not familiar with what it is that I'm talking about, and this is your first time hearing about this, go over to Spotify and type in the BIS Business Podcast, The Carry Trade Unwinding. It is from September 4th, 2024. It's about a 20-minute podcast, and it's of these two individual representatives from the BIS discussing this topic further. And it is absolutely mind-boggling that nobody in the markets is paying attention to this, because this is, if not one of the biggest risk factors to global risk assets as we head into 2025, if we see this unfold at a rapid pace. Again, it is not confirmed that it's happening, but if it does, it will be and have significant implications via the effects that it would cause in global markets across the board, not only in stocks and crypto, but also in FX and commodities markets as well. Additionally, Japan's fiscal landscape poses challenges with rising debt servicing costs and political pressure from permanent tax breaks potentially increasing its fiscal deficit. The Bank of Japan's exit from yield curve control and its tapering of bond purchases could drive bond yields higher, further straining government finances and potentially sparking broader market volatility. Then last but not least, outside of the U.S. inflationary pressures, the Bank of Japan central bank positioning and Middle East tensions, last thing I'm paying attention to is Middle East tensions, all right? So another risk to monitor is the ongoing tensions in the Middle East. Just yesterday, which was extremely positive for risk assets across the board, Hezbollah vowed to continue its resistance and support for Palestinians, even as its ceasefire dealt with Israel came into effect. So yesterday, we had an announcement of a possible ceasefire and so on and so forth. I don't know, just because of the mix of fundamentals that have come out surrounding it, if it's been solidified or not yet, but that's what the environment seemed like yesterday. And we know, obviously, of course, looking back at the year of 2024, that was definitely one of the factors creating sentiment risk off in the cryptocurrency markets in 2024. Every time we saw a breaking headline of Middle East tensions, it tended to weigh on the cryptocurrency market as the sentiment turned risk off. So this was positive to see. However, today, the situation escalated again as the Israel Defense Forces, or the IDF, attacked Hezbollah in a compound in Lebanon, citing preparations for a rocket launch toward Israel. This marks the first such attack since the ceasefire took effect on Wednesday morning. So that's why I said, who knows if this is solidified or not, but this is, again, something to be mindful of. So the recent strike occurred north of the Latini River in the Sidon, hopefully I'm pronouncing this stuff correctly, I apologize if I'm not, area, which according to a security source constitutes a violation of the ceasefire agreement. While there was no detection of an imminent rocket launch into Israel territory, medium-range rockets with the range from, I'm going to butcher that one, Haifa to Tel Aviv, the activity of Hezbollah personally within the facility prompted an IDF to respond. So just keep in mind that any further escalations and tensions in the Middle East could inject fear, uncertainty, and doubt into the markets, potentially driving demand for safer haven assets. While there has been no immediate threat or negative impact on risk assets, like I said, this is not something to be mindful of right now, but into the future, it's an area, like I said, to pay attention to as we head into 2025. All right. So to end this fundamental piece before we get into the technical analysis, while the cryptocurrency market remains relatively stable for now, I'm still optimistic moving with the current trend. External factors like the U.S. monetary policy, inflationary pressures, Middle East tensions, and Bank of Japan policy decision could shift sentiment rapidly. It's crucial to stay alert to these developments, particularly as we approach the end of the year and transition into 2025. All right, so that is the fundamental report that I just recently typed out this morning for the private community members to keep them in the loop of what to be paying attention to moving forward. Now let's get into the technical analysis. We'll just do a quick TA look at the total cryptocurrency market cap. As of time of recording this video breakdown, we're down about $37 billion on the day, as you guys can see over here to the right-hand side, or about 1.19%. So, like I said in the fundamental report, for now, we have held above the $3 trillion mark in the total cryptocurrency market cap for about 10 days, from give or take roughly around the 17th of November till today, the 28th of November. We have been comfortably hovering or ranging above the $3 trillion mark. Right now, obviously, of course, the market sentiment still remains risk on. However, if the market sentiment continues to dampen further, or any of those things that I just recently mentioned become a player in the market that affects risk sentiment, changing it to risk off from risk on, and we can break below the $3 trillion mark with a bearish close on the 8-hour time frame and above, and see a bearish retest where we do not break higher above $3 trillion, that is where I will start to be concerned, where I will start to consider probably securing some positions that I was taking back in August and September when the market was at $1.7 trillion. For example, buying XRP at 49 cents, buying Arrow at 65 cents, buying soy back when it was worth 55 to 60 cents, now trading above $3, right? So right now, I'm not securing any profits in my positions. This is nothing, in my personal opinion, to be concerned about, considering that the market is down today about $38 billion. I will not start to flip my risk on sentiment to risk off until we see a bearish break below the $3 trillion mark with a bearish retest on the 8-hour time frame and above. Now, if we were to see that unfold, in my personal opinion, again, a correction of this most recent bullish move from the November low to the November high, if this is the November high, would be a healthy correction. So looking at some areas that we could extend a pullback down into if a correction were to unfold under a risk off market sentiment as we head into December. If we take a Fibonacci extension looking at a discounted price using a fib from the low of November to the high, you can see that the 62 to 79% retracement of this most recent bullish move would fall in line with roughly about 2.6 to 2.3 trillion dollars. A full Fibonacci retracement or deep retracement pullback down into November lows would put us back at 2.1 to 2.2 trillion dollars, which again, in my personal opinion, zooming out on the higher time frame, albeit it might be painful and create a lot of fear, uncertainty, and doubt in the short term, would still be healthy. If we pulled back down here into these discounted ranges, correcting some of this November move, if again a risk off market sentiment prevailed, it would still be healthy for a bullish continuation long term as we head into 2025, right? So even though this price action pullback or a scenario that unfolded where this came into fruition would be painful for retail traders that are uninformed and uneducated on the market landscape and why a pullback like this would happen, it would be presented or seen as in this community as an opportunity because we could get into discounted positions. For example, if XRP were to break below or go back beneath $1 under these conditions, I would definitely scoop up some more XRP, considering that we have now confirmed that it is very, very reasonable to understand that XRP is most likely going to at least revisit its all-time highs, right? And I'm just using XRP as an example. So under bearish conditions, under any of those prevailing market sentiments that I just mentioned, and we see a risk-off sentiment, a break below 3 trillion, a retest on the higher time frame, and price action staying below it, I could definitely see us possibly coming back and pulling into the 2.6 to possibly 2.5 range. Under extremely bearish conditions, possibly correcting this entire November move, coming back down into 2.3 to 2.1 trillion dollars. I'll assess the markets further if a scenario like that unfolds, but right now that would be my worst case bearish sentiment as of time of recording this video breakdown. To the upside, if we can remain above the $3 trillion mark, looking at this more recent, most immediate bullish leg where we started to create some higher low, higher high formations, just taking a fib from the low here at roughly about $2.8 trillion up into the high from November at 3.3 trillion. If we can remain above the $3 trillion mark, which you can see comes in at about a 62% retracement from this most recent bullish leg, and we can continue higher above $3 trillion, we could possibly see an extension in the total cryptocurrency market cap after accumulating some orders up into $3.5 to $3.6 trillion. All right. So that's my bullish continuation thesis, and I will reassess the market sentiment if we do see $3.6 to $3.5 trillion come into fruition. All right. So total cryptocurrency market cap, real quick analysis out of the way. Those are just some interesting key psych levels that I'm paying attention to. Let's get into XRP. All right. XRP. So under the conditions, let's talk bearish sentiment first. Let's talk dollar cost average levels. And obviously, of course, I'm utilizing the previous analysis that I put out to you guys. This has not changed. This is the most recent update with accurate institutional deltas. Now, there's a lot of people that are like, oh, XRP couldn't go below $1. Again, you can't listen to people that act like they know the future. You have to adjust to changing market conditions. You have to be adaptable, and you cannot marry a bias. If you marry a bias, then when that unmarried bias comes into fruition, you will be left caught with your pants down, not understanding why things are happening. You don't want to do that. You want to be able to react to both conditions. If XRP continues bullish, know how to react. If XRP flips bearish and goes back below $1, know how to react and control your emotions to take advantage of opportunities. Okay. So with that being said, let's go over both scenarios. Under the first scenario, where we would see a risk off market condition, like I covered in the total cryptocurrency market cap, that means the total cryptocurrency market cap breaks below $3 trillion under any of those fundamental conditions that I mentioned, escalating further, creating a risk off market sentiment, and seeing crypto break below $3 trillion, heading back down into 2.6 to 2.5, then we could possibly see a deep retracement on XRP, and only then. All right. So that's why I told you guys I'm being mindful above $3 trillion that this sentiment is going to continue to the upside. And only if we break below 3 trillion can we start to expect a pullback. So for targets on XRP, first, if we can maintain above this buy delta at 1.24 or $1.24 to $1.28, I will remain optimistic that this uptrend is going to continue. If at any point in time we break $1.24 to $1.28, our first downside targets come in at $1.03 to $1.07, or the institutional buy deltas from where price started to create these higher lows before we saw a market continuation. So our first dollar cost average levels that we will start to look at, depending on market sentiment, will be at about $1.03 to $1.07 institutional buy deltas. Anything below $1.03 to $1.07 in a risk-off market sentiment prevailing, dampening market mood, and seeing crypto continue its overall total market pullback, then 92 cents to 84 cents, I was going to say $1.84, 92 cents to 84 cents are our next bearish targets. And again, logically speaking, if the most recent top is in at roughly about $1, let's say $1.61 to $1.62, if we were to take a fib from the November low at 49 cents, where we were telling everybody we were buying some XRP at, and we were to take it, if again, this is the November high at $1.62, you can see that a Fibonacci retracement of 62 to 79% would healthily fall in line with 92 to 84 cents. Imagine how many people would be fearful and start talking crap about XRP if it did break back below $1, when in reality, this would just be a healthy correction of the most recent bullish move. It is healthy if you understand markets correctly. It is healthy for them to make a correction after an insane bullish move. Now, some people in the markets will not say that this is an insane bullish move, but that's because they're greedy. If you were buying at 49 cents, you're seeing right now, unless you're taking profit, this is unrealized profit, but right now, where current price is, 198% gains, okay? From an institutional perspective, right? From a TradFi perspective, gaining 198% on an investment is insane, okay? So with that in mind, again, if we did see XRP correct down into 92 to 84 cents, it wouldn't be anything to be fearful of. It would be seen here in this community as an opportunity, because we would know that it is just a healthy correction in comparison to the most recent bullish leg that we just experienced. All right. Now, if we stay above $1.24 to $1.28 and the risk on sentiment prevails, what are our immediate upside targets? Well, you can see here in this analysis when I posted it to you guys, if you zoom in here, you can see some of the institutional deltas came in at $1.57. Interestingly enough, right now, XRP stalled out at $1.57. So you can see how accurate these institutional deltas actually are. Right now, we are starting to create some slight bearish order flow underneath of $1.57, where you can see right now XRP has consecutively made 2 lower highs in comparison to the previous one. However, we are right now just starting to coil up. So with that being said, if we can hold above $1.24 / $1.28, we can maintain this overall bullish optimistic outlook and risk on market mood, and we can start to break the institutional sell delta at $1.57 to $1.70. Our next bullish targets come in at institutional sell deltas of $1.80 to $1.92. All right. So those are our most immediate bullish targets, roughly $1.70 because $1.57 was already accomplished, to $1.80 and $1.92. All right. So with that being said, you guys now have a full analysis, not only on the fundamental aspect of what to pay attention to as we head into 2025, you guys also have a quick crypto analysis on the total market cap, what to pay attention to, how, again, not financial advice, but I have alarms and alerts set here at $3 trillion in case we start to break that, to be mindful of possibly taking some positions or scaling out of some moves that I was dollar cost averaging in back in August and September. Not financial advice. Again, I'm a day trader, so I tend to do that. For you dollar cost averagers that are here just to buy and hold, I don't recommend that type of strategy, but again, to each his own. So with that being said, if you guys enjoyed this breakdown, smash that thumbs up button and subscribe if you're watching this recording. If you're watching this live, then tap into the CYPRX private community. We're always keeping individuals engaged and involved from a logical, technical analysis and fundamental perspective. No hype here, just accuracy via fundamentals and sound, logical, institutional delta zones that nobody else in this market on the retail side of things has access to. You guys can tap into that information. Go visit CYPRXtrading.com. Check out our holiday discounts. We'd love to have you on the team. With that being said, as always, be cognizant out there. Please be aware. And remember, 2025, 2026, 2027 are going to be exponential. 2024 should have been a really foundational year for a lot of people, learning and growing, creating an infrastructure for yourselves to, manifest the reality that you really want to achieve in this life. I feel like so many people have come into the crypto space and they're starting to realize that there's influencers out there that don't have it in their best interest. Ignore and block those people. Stop following people that are always so fixated on spiking your dopamine, and instead follow an educational path. Be a man or a woman of wisdom that chases knowledge and education and valid information. Don't be somebody that just feeds into all the hype in crypto, and start to really learn the ins and outs of these markets, what creates inflow and outflow of these markets, understand them intraday, and really understand how to survive long term. With that being said, many blessings to you guys. Like I said, be cognizant, be aware, and I'll see you all in the next video breakdown.